morning and welcome to class number 8 of our 2022 Virtual HOA Condo Academy in partnership with the cities of Avondale, Chandler, Glendale, Goodyear, Mesa, Peoria, Phoenix, Scottsdale, Surprise, and Tempe. My name is Beth Mulcahy, and I'm the managing partner and senior attorney for the Mulcahy Law Firm in Phoenix, Arizona. I've enjoyed representing HOAs and condominiums for over 25 years. My firm currently represents over 1,000 planned communities and condominium associations throughout the state of Arizona. In addition to my legal practice representing associations, I also currently serve on my HOA board and have for many years. You may have noticed this morning that we prematurely sent our typical 1-hour reminder this morning via email. Sorry about that. It goes without saying, I'm very excited to be with you here today. So excited that I sent it an hour earlier than I was supposed to. So thank you so much for joining us on Zoom today and on Facebook Live. And welcome to class number 8 of our 2022 Virtual HOA Academy. We have a lot of great topics that we're going to be talking about here today. Creating a budget, how to read HOA condo financials, and how to prevent fraud and embezzlement in your associations. But before we dive into the meat of our seminar here today, I always like to start out by finding out who's in our audience today, so I can tailor the information that I present to suit all of you the best I can. So we're going to have 2 polls so that I can get a little feedback from you that are going to be launched at the same time. If you're joining us on Facebook Live, we just ask that you answer the question in the comments section. If you're joining us on Zoom, you're going to have the poll right on your screen. So the 2 questions that the poll is asking today is, first, in which city do you reside? That's question number 1. And then the second question is, what is your role with the association? So are you a board member? Are you a community manager? Are you an owner? And again, joining us on Facebook Live, just make sure you write that in the comment section so that we can factor in your answer. Okay, while we're waiting for those results to come up, let's talk a little bit about what we're going to be discussing today. So we're going to be talking about everything financial pertaining to associations today. Everything you need to know to stay out of trouble and to keep your association in good financial health. First, we're going to be talking about how to create a budget, which is a really timely topic because in August, you should already be working on your 2023 budget for your association. So we're going to give you the how to create your budget, how to factor in this escalating inflation rate that we're seeing in our country. How can you read your association's financials and make sure that you're doing your due diligence and living up to your responsibility to the association in looking at your financials, whether you're the treasurer, the president, board member at large, or other officer in your association. We're going to give you some tips on that. Lastly, we're going to talk about a scary topic, how to prevent fraud and embezzlement in your association. And that is a topic, unfortunately, that it's scary. People don't like talking about, but it's necessary because there are so many examples of associations that have had fraud occur, misappropriation of funds occur within their association, whether it's through a management company or maybe through a board member. So we're going to give you tips so that that never happens to your association. Okay, I'm also going to start out by giving a quick review of what happened in the legislature this year. And so I know that we're going to be giving our survey results here shortly. But first, we're going to start in and talk about what happened in the legislature this year. So some of you may have been following this year's legislature. It was actually really kind of an exciting year. It was one of the longest legislative sessions in history in the Arizona legislature, 167 days. There were 25 bills that pertained to associations that were introduced. We ultimately ended up with 5 bills that were passed by the House and the Senate and signed by our governor. And I'm going to give you just a quick overview of those 5 bills. So here are the most important things that you need to know about the 5 new laws that are going to be going into effect to affect planned communities and condominiums in Arizona. Okay, so first things first, when did these bills become law? So these 5 new laws are all going to go into effect September 24th, 2022. So we have kind of like a nice honeymoon period right now to plan for when those bills will be going into effect on September 24th. So as of right now, these aren't effective yet, aren't the law yet, but they will be September 24th. Okay, so there's just 5 quick areas that we're going to talk about. The first is a law on artificial turf. The bottom line on this law is that, and this only applies to planned communities, just so you know. The bottom line on this law is that planned community associations cannot prohibit the installation or use of artificial grass on a member's property. So if you're an association that already has regular turf in your association, and you have an owner who wants to install artificial turf on their lot, the association will be required to approve that. There are some kind of stipulations and some loopholes on that, which we're going to talk about next. But bottom line is artificial turf is here to stay in associations that are planned communities on an owner's lot. And we can't, prohibit an owner from installing it. So here's a couple ways that we can regulate it as a planned community association. So we can adopt rules as an association regarding the installation and the appearance of the artificial turf. And so we can implement rules that will talk about, the quality, the grade and quality of artificial turf that can be installed. Also the location on the property it can be installed, and the percentage of property may be covered with artificial turf. But remember, if you're going to be, you're putting like a percentage per lot of artificial turf that's allowed, it has to be the same percentages that may have been allowed for regular turf. Can the association ever require removal of the artificial turf after it's installed? Yes, there are some small exceptions on that as well. So if the artificial turf is creating a health or safety issue, and the member doesn't correct it after receiving notice, the association can require that the artificial turf be removed. Also, if the artificial turf isn't being maintained in accordance with the association's standard of maintenance. And so really important that if you're an association that has regular turf right now and you're a planned community, you really need to be starting to think about what type of rules you need to implement to make sure that people aren't creating health and safety issues with their artificial turf. How much percentages allowing of the artificial turf. And making sure that maintaining it going forward, because there are times when the artificial turf, the appearance starts to look bad, and also the edges start to read up, etc. Okay, there are a couple times where an association that's in a community, and I'm sorry, I'm hearing some feedback that there is, a little bit of a quality issue on the sound today, so I'm very sorry about that, but we're working to correct it right now. So when can a planned community require removal of artificial turf? And so some examples of this would be if the planned community doesn't allow installation of natural grass on a member's property. So if you're one of those associations that maybe is totally desert property, and no natural grass is allowed, you would be able to prohibit artificial grass at that time too. Okay, let's talk about the next section of the new legislation, peaceful assembly on association common areas and political signs. Just the bottom line on this new bill that again is going to be going into effect September 24th, is that if an individual unit or lot owner in a planned community or a condominium wants to organize, discuss, or address condominium or planned community business, including really anything pertaining to the association, the association, has to allow peaceful assembly on the association's common areas. If the owners want to put up notices regarding their peaceful assembly times that they're going to be, discussing things, the association has to allow those signs to go up and pick it up. That might be like on a bulletin board or maybe even on the association's website. Really, any place that regular meeting notices would be associations going to have those peaceful signs as well. The board can pass reasonable restrictions regarding the use of the property. So, maybe if you want to put a limitation on how many people can assemble, as long as that's reasonable, that's fine. Another part of this bill that's kind of interesting, in addition to the peaceful assembly, is political signs. They added to the definition of political signs that a political sign also that's allowable to be posted on an owner's property is one that would be regarding election of board members and also removal of board members. Also in support or opposition to something that's going on at the association, whether it's amending the CCNRs or levying a special assessment or an increase in the assessment rate. So political signs are now going to extend to association business, and associations cannot prohibit those from happening. I'm hoping that the audio is a little bit better here today. If it's not, I promise you that we will send out a full script of what we discussed here because some of you may know this, some of you may not know this, but we really prepare extensively for these classes. And so we have a full script of everything that is being talked about here today. And we'll be sure to send that out to everybody today as well, in case you missed anything. Okay, the next bill, this is the fourth bill we're going to discuss, talks about condominium termination. And ultimately, this bill it's only going to apply to condominiums. We're really not going to see it very often coming into play. But after the effective date of this amendment, or after the effective date of these bills, which again is going to be September, September 24th, basically, in order to terminate a condominium, it can only be terminated by the agreement of 95% of the others in the association, or a larger percentage if the condominium association's documents require that. And so, again, we're not going to see the terminating of condominiums very often, but if your association is in that position after the effective date of the new legislation, it will be much more difficult to terminate your condominium. Okay, next one, last one that we're going to talk about that was signed into law today talks about vacation rentals. Probably the most common topic that I hear about are problems with short-term rentals, enforcement, and vacation rental problems. So I think that this bill, it applies to planned communities and condominiums. It's an attempt by the legislature this year to further regulate short-term rentals. And so basically, it adds to the ways in which a city or town can regulate vacation or short-term rentals. Is kind of the first part of this, this law. And basically, some of the requirements are the owner of a vacation or short-term rental must provide emergency contact information for the owner who is responsible for responding to complaints or emergencies. And so the city or town can impose a penalty of $1,000 against the owner for every 30 days that they fail to provide the contact information. So, starting September 24th, hey, this is a big deal for, landlord owners. They have to provide emergency contact information to the cities or towns, or they're going to be subject to this really hefty $1,000 per month penalty. It also gives us a great opportunity, if there is a problem, for this, you can contact the city and complain about it with a short-term rental, that they will peers, because they're asking for the contact information, they will now be contacting the owner and landlord or whoever the designee is, to deal with the problem. The second way in which a city or town can regulate a vacation or short-term rental is that they have to obtain and maintain a permit or a license with the city or town. So the landlord owner is going to be required to do that. Okay, we're back. Sorry, we're having technical difficulties with my office today on the internet. So if you wouldn't mind putting in the chat or the Q&A or on Facebook Live, if you can hear us okay, I'd really appreciate it. Sorry again, sometimes with technology, we have these little snafus. So we apologize for that. But anyways, we're just talking about vacation rentals and short-term rentals and the different ways in which a city may regulate vacation rentals. And again, if you can't hear us, or if you couldn't hear us for the first part of the seminar, just so you know, we're going to be sending out a full script of what we talked about here today to everybody who is on Zoom, and we'll also post it on Facebook Live. So don't worry, you won't miss anything. So just as a refresher, there are a number of new laws that are going into effect on September 24th. We've already talked a little bit about some of them, and we're going to be, continuing to talk about them right now. So the one that we're on right now is vacation rentals and short-term rentals. Remember that, just as a refresher, each landlord owner has to provide emergency contact information to the city or town. If they don't do that, it's a $1,000 penalty for every 30 days they don't do it. So September 24th, those landlords better have their ducks in a row. Next thing is the landlord owner has to obtain a permit from the city or town. The next thing is that prior to offering a vacation or short-term rental for rent for the first time, the landlord owner must notify all single-family residential properties adjacent to, directly and diagonally across the street from the property, that the property is being used as a short-term or vacation rental. And I think it will be really helpful for associations to, if we have a list of the vacation rentals or short-term rentals for your associations, maybe to provide this information to those renters, to the landlord owners, so that they comply with this new law. A third part is that the owner of the short-term or vacation rental property has to display the local regulatory permit that we talked about a minute ago, or license number, if any, on each advertisement for the vacation or short-term rental property the owner maintains. So the advertisements are going to have to also have this permit number. Lastly, the city or town is going to require that the vacation rental or short-term rental maintain appropriate liability insurance to cover the vacation or short-term rental in the aggregate of at least $500,000, or to advertise and offer each rental through an online lodging marketplace that provides equal or greater coverage. So I think we can see that the legislature has spoken, and they want to hold landlord owners more accountable as they are, navigating short-term and vacation rental properties. Okay, this bill also states that a city or town may deny an issue of a permit for a rental property in a few circumstances. So we're going to talk about that. If they don't provide the required information, if they don't pay the license or permit fee, if at the time of the application, the owner has a suspended permit or license for the same vacation or short-term rental, if the applicant, the landlord owner, provides false information, or if the owner is a registered sex offender or has been convicted of any serious felony in the last 5 years. So really interesting how the cities and towns are getting more involved in the regulation of these short-term rentals. And lastly, a city or town that requires a local regulatory permit or license must adopt an ordinance to allow the city or town to initiate an administrative process to suspend a permit or license for a period of 12 months if 3 minor or 1 significant verified violations occur. So this is really beefing up how we can handle these short-term rentals and violations and bad tenants. And it's going to be more important than ever to document all of these violations by contacting the city and, the police when appropriate. So we're going to be talking more about these, new regulations, new statutes that are going into effect on September 24th. As we near the effective date of when these laws are going to be going into effect. So we're going to be talking about them again at our first Friday, which is coming up here again soon, the first Friday of September. And then we'll also be talking about them at our September, neighborhood services seminar as well. So you'll have plenty of opportunities to ask further questions as you continue to navigate this as we go forward. Okay, so we spent a bunch of time on the new legislation, but it's really important that all of our clients know about that. Now we're going to dig into the topic for today, which is how to create a 2023 HOA budget. So just as a starting point, a community association budget is an itemized summary based upon the anticipated income that your association gets, right? And your income is from assessment income that you get from the owners paying assessments or dues to the association. And then your expenses, which would be like what you pay your management company, what you pay your landscaping company, your lawyer fees, your insurance fees. And so the budget is just a summary of your income versus your expenses, and it has to balance out to zero at the end of the year so that you make sure that you have enough money to meet your expenses. Most association documents require a board to adopt a budget every year. So for 2023, we're in the zone right now. The time to be doing it is typically August, September, October, November, with the absolute latest that it should be approved at your December board meeting. Most associations' fiscal year is the calendar year, so you're going to need to have that new budget in place by December 31st, 2022. What happens if you can't agree on a budget for 2023? What typically happens is the budget for 2022 just carries over into 2023. And hopefully you can get it passed sometime early in 2023. Who prepares the budget? So it really depends for your association. What I can say is that sometimes you have a budget committee. Some really large associations have a budget committee. Sometimes your property management company does the first run of the budget. Sometimes your association's treasurer. Sometimes the president. It really just depends. Every association is different. And usually what happens is there's key people who prepare the budget and work on it before it actually comes to the board for its first review or first discussion. And so that's very common that you may have like a less than a quorum working on it. Typically the treasurer is pretty involved with the management company working on the budget. Make sure if you're an association that you're checking your governing documents to determine if there's any special requirements regarding your budget. Sometimes the members are required to participate in the budget process for some condominiums especially. But most times the association's board is responsible for approving the budget. But in some cases, some condominiums require the owners to approve the budget. And if you're one of those associations, it's an extra step that's going to take a little bit extra time. So check your documents to make sure that the board alone can approve the budget, and you don't also need to have the owners approve the budget at a regular board meeting. Okay, let's talk about what are the steps to complete the budget process. We're going to be sharing with you in a few minutes here a great summary cheat sheet that we've created on creating a budget for community associations. So I hope that you will take that as a great takeaway piece back to your board on some tips on how you can prepare your budget. It's kind of a deep dive of what we're going to be discussing here today. And we're going to be sharing that with you on Zoom and Facebook Live here shortly. Okay, so what are the steps to complete the budgeting process? So we already talked about when you do it, right? We're in the zone right now, August, September, October, November. First thing you should be doing is look at last year's budget, so 2022's budget, and compare the differences between what was budgeted and what was actually spent. Now, very few associations are going to have a picture perfect budget, right? Because maybe the pool pump unexpectedly went out and we had an expense for maintenance or replacement of a pool pump that we weren't anticipating. And maybe that was $5,000. And that means we got to trim $5,000 somewhere else. Or maybe you're starting to see an increase in the number of owners that aren't paying their dues on time, their assessments, which is something that we are definitely seeing. And in that case, the income that's coming in may be a little bit less than what you had anticipated if 100% of the owners were going to pay their dues. So talk through, why are things different? When we look at the 2022 budget, you're going to be only looking at the numbers, let's say through, the first 7 months of 2022. Why are there variances? Why is something higher? Why is something lower? We're hearing from a lot of clients, and I do know just with my association as well, our utility expenses are significantly higher than they were in 2021. And we anticipated an increase, but we didn't anticipate that they were going to almost double in 2022. So that's obviously a concern. And in some cases, you know, we're looking for water leaks. In other cases, these are just expenses that are going to carry forward in the future. So we need to kind of look at last year's budget, 2022, look at the variances and determine, hey, are these things that we're going to see again in 2023? And if so, factor those into the budget. Another thing you should do is evaluate the needs of your community for 2023. Do annual assessments need to be raised? Because, you know, we're seeing increases due to inflation. Inflation is at 9.1%. And, you know, are we having step ups in our contracts? Like, is the management company going to be paid more in 2023? You know, are we going to need to replace the cool decking at the pool? You know, are there going to be expenditures that we can anticipate, maybe even after looking at our reserve study, that need to be done in 2023? You know, are there expenditures that are a result of the economy, you know, being in a little bit of a tailspin right now with the inflation rate? We kind of have to be fortune tellers, right? We have to look in the future and be like, okay, what's this year 2023 going to look like? And there's a lot of variables. So we just have to be conservative and try to make the best choices we can possible. You know, assess the needs of the community for the future too. We talked a little bit about what projects need to be done in 2023. Is it something that we can push off another year, or is it something that, hey, this really needs to be done? You know, when was your last reserve study done? This is a really important time. You know, reserve studies should be updated probably about every 5 years. And so take a look at, hey, do we need to put into the budget a reserve study, you know, cost to update our reserve study? Do we need to update our CC&Rs this year? You know, have our CC&Rs not been updated since 1980? You know, you may want to put a placeholder of about $5,000 for updating your CC&Rs in there. And then you're going to kind of have to play this game where, you know, once you're putting numbers in, and most people, most associations do use a Excel spreadsheet for this purpose. I have a sample one. If we have any associations that are self-managed or who just want to see one, you know, where it really helps having the Excel spreadsheet with all the formulas already put in. And so let's see, I'm hoping that you guys can still see me. Let's see. I think you can still see me. I'm getting messages on my computer. This has just been a technology day that has not been a good day here. But anyways, so, you know, you're going to have to play with the numbers a little bit, because you kind of know what, you know, how much of an increase that you can do without a membership approval by looking at your association's documents. You know, and you're going to have to play with the numbers. Like, first, you got to look at what the expenses are going to be. And then you're going to need to look at the income. And if your expenses are exceeding your income, that means you need to increase your assessment rate. So you have to look at what your CC&Rs say about increasing the assessment rate. You know, do you need a vote of the membership above a certain percentage? In most instances, you will. Do you need to have a special assessment? And this would be a good opportunity to get your attorney involved for your association and get some advice about the ballot, if you need to send out a ballot to increase the assessment rate, etc. Ask questions of your vendors. So contact your attorney, contact your insurance agent, contact you know, your landscaping company if it's not already written into the contract. Are there anticipated increases that we can expect in 2023 that we need to factor into our budget? Look at the contracts for your association. Some of these step ups in the amount that you're paying are already written in the contract that you've signed, and you're contractually obligated to pay more to the vendor each year. And so take a look at the contracts and make sure you get the correct amount that's going to be owed to the contract based upon, you know, what the contract says. Get that into the budget. Because you wouldn't want to be putting in, let's say that your management company gets a 5% increase in 2023. You wouldn't want to be putting in the 2022 numbers, because right off the bat, when you start 2023, you're going to be, down 5% in that category every month. At this point, after you get all of this information, after you've contacted your vendors, looked at the contracts, evaluated the 2022 budget for overages, that's when you really need to strategize about and analyze the information obtained and kind of play with the numbers on the Excel spreadsheet to determine, what your sweet spot is in terms of what we think the probable anticipated expenses are versus how much income we have coming in on assessments. And then you're going to have to back it out and determine how much, per month or per quarter, depending on how your assessments are collected, the owners need to pay. And again, if there's an increase that requires a vote of the membership, you're going to have to get working on that right away so that we can implement that in January of 2023. At this point, then you will want to bring the information to the board and have the board discuss it. Most boards have a discussion during a regular board meeting, and they talk about the numbers. They, whoever prepared the budget, maybe it's the treasurer or the management company, they go through the budget line by line with the board for 2023, and they explain, this is why we did this variance from 2022 to 2023. Oftentimes they have the 2023 right there on the Excel spreadsheet, so you can see the numbers right next to each other. They should give an overview of why line items were increased or decreased, and the rationale for that. Try to keep it simple. I know that when you're preparing the budget, and I've done it for my association, so I know when I was a treasurer, you get stuck in the weeds. It's a weedy project, right? And you don't want, when you bring it to the board, to have it be confusing or have a lot of weeds and, making it really difficult to understand. Basically, we just want to give them the bottom line. Here's the bottom line. After evaluating all of the information from 2022 and contacting our vendors and strategizing about increased costs based on contractual prices and the inflation rate and increased utility rates, this is what we think our expenses are. And yes, I know it seems, strange that the utility is 30 or 40% higher than it was in 2022, but we're looking at the trends in 2022, and that's where we think this is going. And so maybe just call out the different subparts on the budget that might cause people to raise their eyebrows. If there's an increase that seems a little out of the norm or higher than usual, explain that away. Then address trends. Inflation, of course, is a big one. Like I said, the utility bills. And be open and ready to answer questions, because there's a sticker shock. People like to think that their assessment rate is always going to remain the same. The reality here is that the assessment rate should be going up every year. When associations come to me and they say, we haven't raised our assessment rate in 8 years, and they think it's a good thing, I'm thinking to myself, that's a sign of mismanagement by the association's board, because everything is costing more every year. And so that means that if you're keeping, your income at the same level and your expenses are going up, you're probably deferring maintenance. You're probably not doing capital improvement projects that you may need to be doing. And it may not be in the best interest for the property values of your association. So a couple closing points on budgets. Start now, please. Make sure that you are being strategic in how you're evaluating the numbers from 2022. Get your attorney involved if you need to have an increase in the assessment rate that requires a vote of the membership. Think about getting a new updated reserve study. Look at our cheat sheet on budgeting for community associations, which is an awesome summary of this entire process that we just talked about. You can take that back to your board. If maybe you're on your board, but your treasurer isn't here today, you can take that back to your treasurer to show that person. And just remember that we're here as a resource for you. If anybody wants a sample budget, you can email me and I'll give it to you for free. My email is bmulcahy@mulcahylawfirm.com. And, or go to our website and send a request to the website at mulcahylawfirm.com. And we can provide that to you by email, and you can play around with it, look at how we structured it for the sample association. Okay, so good luck with your budgeting process. If you need any help or need somebody to be strategic with you on it, keep me in mind. I love projects like that, and I've helped a lot of associations get through difficult times when they aren't quite sure how to handle issues with their budget. Okay, let's switch gears and talk a little bit about financial responsibilities of the treasurer and of board members. So, important thing to remember, just an important concept when you're serving on your board, is the concept of your fiduciary duty to the corporation. So if you are serving as a director at large or an officer of your association, you have a fiduciary duty to act in the best interests of your association. And one of those duties is a duty of care. And so this really goes hand in hand with what are some important financial responsibilities of the treasurer and board members. So I'm going to start a little bit with the treasurer's responsibilities, and then I'm going to just talk about directors at large. So I've served as the treasurer of my association for several years. I'm not currently the treasurer, but I have been the treasurer in the past. And other than being the board president of your association, which truly is a huge responsibility and a huge time commitment for an individual, serving as a treasurer is equally important, maybe not quite as large of a responsibility in time commitment as the president, but the treasurer has to spend time analyzing, looking at, reviewing the financials, and it's a weekly, monthly type thing. It's not an everyday thing, but it is a weekly check-in and definitely a more extensive review every month before the board meeting. So let's talk a little bit about what are some things that treasurers are typically doing. So treasurers are typically a signer on the association's bank account. In some cases, management companies are allowed to sign checks on behalf of the association. In other cases, up to a certain dollar amount, maybe. In other cases, the treasurer is maybe a co-signer with another board member on the association's checks that are being written. Just depends on how your association is structuring that. If you are signing checks, before you sign it, well, first, never sign blank checks. Never sign a pile of blank checks. That is a breach of your fiduciary responsibilities to the corporation and a horrible idea. So if you are signing checks for your association, you should be receiving them with the backup information attached to it. So the bill that needs to be paid, what you should do is look at the check, look at the bill, and make sure that the numbers match. Make sure that there aren't any late fees. Make sure it's the right bill for your association. We have seen cases over the years where an HOA pays a bill of another HOA for like a decade. And then they find out, oh my gosh, we have paid the wrong bill for a decade. That shouldn't be happening. So make sure that it's for your association. Make sure that the amount that you're paying is correct. Make sure you're paying it on a timely basis. Also, as a treasurer, look for variances. If you see the water bill and the water bill is doubling or tripling, at certain times of the year, you will see that. Like when we're doing overseeding, it's obviously there's going to be more water that's going to be used. But if it's not an overseeding water issue, there may be a leak. And it's important that if you're seeing a variance on a bill that you're asking questions like, hey, this bill seems high, we need to go out and have the water company take a look at this to see if there's a leak. So you need to be strategic on that to save your association, because I have seen associations that overpay on, water leaks for months, and it could end up being $30,000 or $40,000 expense for your association. So take care when you're reviewing and signing checks for the association. Another responsibility is look at the bank statements for your association, and you should see an exact replica of the bank statement, the original, or maybe you have online access to look at the bank statements, and you should be carefully reviewing every page of the bank statement every month to make sure that you're not getting overdraft charges, to make sure that everything seems in order, that money isn't being electronically transferred. And making sure that the amount of money that's in the bank account is consistent with what your balance sheet says. Also, reserve funds, same things with that. Making sure that the money, if you have, let's say you're investing your reserve account money in CDs, when are the CDs expiring? Are the CDs with FDIC insured banks? That's very important. Are we under the limit for FDIC insurance? Like, you wouldn't want to have all your money tied up in one bank and it's over the FDIC insurance rate. And so you need to be analyzing this every month. Now, I know I saw kind of a weird thing on our financials from my association. We had a couple CDs at a little bit higher rate with some banks that were foreign banks. Like, I can't remember exactly the names of them. I think it was like Bank of China and Bank of India. And I was concerned about that because there had been some publicity that I had seen, in the Wall Street Journal about some of these banks having some issues. And so I asked a question, hey, is that bank FDIC insured? And got the answer that yes, it was. And I tried to steer my board back to, some of the more conservative United States banks so that, I had a higher comfort level based upon the news I was reading in the Wall Street Journal. So looking at, when the CDs are coming up for renewal, having a plan so that the money is reinvested. And right now the interest rates are a little bit higher. So making sure that you're making a good business decision, on the CDs, you may be able to get a higher rate right now. Looking at the budget, you have to be able to explain at the board meeting to the board, are we on track for 2022? You're looking at the budget right now for 2022. Are there overages? Will they correct themselves? Why are there variances in the budget? Why are we, 40% over budgeted for utilities? And how are we strategically going to make up for that so we have enough money in November and December to pay our bills? So it's a thinking job being on the board as the treasurer. You need to be looking at all these different things, the checks, the budget, the bank statements, the reserve account, CDs. Also looking at the balance sheet for your association. And if you aren't sure how to read a balance sheet, we have a great resource for you on how to read an HOA or condo association balance sheet. You can find it at activerain.com. And that's a really good resource for you as you're, reading the balance sheet. Another point I want to make about the financials, if you're serving as the treasurer, all financials should be current. So, obviously there's always a month lag. So like, I'm going to be having my board meeting on Thursday this week, and we are going to be reviewing the July financials. For July of 2022. So from January 1st to July 31st, 2022, we will be reviewing at our board meeting on Thursday. And if you're just a board member at large, like now I'm serving just as my board, as a board member, which has been kind of nice actually, because it takes a little bit of the pressure off of you. So what I do as just a board member at large and not the treasurer or the president of our association is the night before the board meeting, I pull out the board packet and I look at the financials myself. And I check to make sure that the checks that are all attached to the board packet look legitimate. I analyze the year-to-date budget. I usually have a highlighter and I highlight the things that are over or under, hoping that the treasurer's going to explain it. I look at the bank statements for the same things that we talked about that the treasurer should be looking at, but I just quickly look at it, like maybe a minute for each bank statement. I look at the reserve account. I look at when CDs are expiring, and I just use my highlighter and I highlight things that I may have questions on. Hopefully at the meeting, the treasurer will answer the questions before I even ask a question. But it's my job as a board member to,
also help the treasurer and be like, hey, have you guys thought about this, or this CD's coming up, or, we've got a lot of money in this one bank. We're over the FDIC limit, should we transfer some money? Just being proactive and helpful, because sometimes having a second person looking and being proactive on it is helpful to the board too. So, maybe I spend 10, 15 minutes the night before the board meeting looking through the financials. I'm pretty good at it now because I was a treasurer, and it could be as little as 5 minutes. And then I ask questions at the meeting if there are questions. And I'm not asking questions to challenge anybody or to be rude. I'm asking questions as a helpful board member. And so, there's a fine line on that. I don't like to see, boards that are dysfunctional and they don't get along, and then they're fighting, and it's like they're trying to pick to make the treasurer look bad. That's not what I'm doing. I'm just trying to be a proactive, helpful board member. Okay, so hopefully that gives you some, good tips on what the financial responsibilities are of the treasurer and of board members as you, navigate your time on the board. Making sure your association is in good financial health is really important. We can't have large shortages, in incomes. You've got to keep your finger on those delinquencies. And we've been really lucky. We've been kind of like in a honeymoon period since the pandemic started, where people are paying their assessments. And but we've noticed the last 2 or 3 months, we're starting to see a drop in the number of people that are paying their assessments on time. And we're starting to see lots of files be turned over to our firm. So as a board member, especially as a treasurer, looking at that delinquency list, and once the owners are, more than 60 to 90 days delinquent, getting that file to be leaned, or that lot to be leaned, and then sending it to the attorney to take legal action is a very smart idea, because the longer you wait on debts to collect them, the harder it is to collect. So really keep an eye on that as we move forward into the last quarter of 2022 and into 2023. Okay, our last topic for today is how to prevent fraud and embezzlement in your HOA or condominium community. Unfortunately, theft of association funds is becoming more and more common in associations. Arizona newspapers, all you have to do is Google Arizona HOA embezzlement, and you will see, or Arizona condo embezzlement, you will see hundreds of articles, unfortunately showing instances where maybe the management company or maybe a board member has misappropriated funds of the association. So this topic is not, something that's an outlier that never happens. This happens all the time. And what I want to give you today are some tools so that it doesn't happen to your association. And for those of you who have known me for a long time, like I said, I've been in the industry 25 years. So I served on my board many years ago. I started having kids in 2006. And so I got off my board right before I had my son in 2006. And then I was off it until 2016. So I had 10 years off. This happened to my association when I was not on the board anymore. And so I want to just warn you that these type of things do occur. It even happened at my association. So in our situation, just give you a quick little summary. When I left the board in 2006, everything was in order. The finances were, we had a reserve study funded at 80%. Everything was fine. And over a decade, a manager came into the association and misappropriated over $500,000 of the association's funds. And it was done in many different ways. It was depositing homeowner checks into a separate burner bank account, for lack of better words. It was transferring money from the association's bank account to this managers to pay bills. The manager bought a BMW and a Range Rover. I mean, just crazy stuff, right? And was paying all of these bills with the association's funds. So if you think it can't happen to you, you're wrong. It can happen. And I want you to know that I got back on our board in 2016, and I was one of the people that helped discover the embezzlement. And we put the manager in jail. And the manager served jail time, not a lot, unfortunately. Our judicial system, I would have liked a lot more time than this particular person got in jail. And we did, we were made whole by being strategic and smart on using our insurance, our fidelity bond, and also going after the bank for allowing a lot of the nonsense that was allowed with the transferring of funds and paying of bills improperly. So if you ever are in this situation, as a starting point, know that our firm is a great resource for you. We've helped other associations who have had problems with embezzlement or misappropriation of funds. And I personally unraveled the situation at my association and came out, with things much better. So just to give you an idea, we were down to like our last 200,000 for the association. Back in 2016, we weren't even sure we were going to be able to pay our bills. And fast forward now to 2022, we have almost $3 million in our reserve account, and we have definitely turned things around and have put in place some very smart procedures so that this never happens again. And I'm going to share those with you right now. Okay, so what can associations do? Be vigilant. I think that's the most important thing. Be on top of your finances, like we just talked a few minutes ago, doing that review every month, making sure your treasurer has some financial experience and understands what their responsibilities are. They don't have to have a master's in business. Okay, they don't. They just have to be looking at the finances carefully and checking to make sure that the association's money isn't being misappropriated. So here are some examples of what misappropriation or fraud looks like in an association. So maybe someone's just taking cash, outright taking of cash, petty cash, transferring money from the association's bank account into their bank account, faked expenses. So submitting receipts for things that haven't been done. Or making up receipts, or maybe the receipts are for something that was for the person's personal use, and they're saying it's association light bulbs or something. Non-existent employees or former employees included in the payroll. Transferring of association funds to another community, so another association, or to a management company, or to the manager personally. Using association funds as collateral on a personal loan, showing investments on the financial statements, that actually don't exist. So they're saying, oh, you have $100,000 in this CD, but there's never any proof that the money is actually in the CD. And, maybe they've misappropriated that money somewhere else, and they're just putting it on in a Word document that, oh, you've got $150,000 with Wells Fargo, and you want to actually see that Wells Fargo statement so that you're seeing that the money is actually there. And then a manager paying personal bills with association funds, which is something that I, gave an example with my association. Okay, what are the warning signs? What should be the red flashing light for your association that, hey, something isn't right here? So missing bank statements and reconciliations. I wanted to say this in the financial part, but I forgot. So if you have your management company or your treasurer is like 3, 5, 6, 8, 9 months behind in giving the finances to the board, that is a warning sign, 100% that something isn't right. You should be getting your financial statement and your bank statements and everything for your association. If you're having your meeting in August, you should have the July financials included. Now, there are times where, maybe you have your board meetings early in the month, like the first week of the month, then you're always going to be a month behind. So let's say you have your August board meeting the first week in August. Well, then you probably will only be reviewing your June financials. Most boards meet the second or third or fourth week of the month so that they have the full financial picture of the association from the month before. So if you aren't seeing regularly your bank statements, reconciliations, financials, in a timely basis, that's a warning sign that things aren't right. Maybe general ledgers that don't balance, missing documents, altered documents, photocopies of things versus originals, unexplained cash shortages. So a big warning sign should be your management company is contacting you saying, we need to transfer the money from the reserve to, the general account today, or the electric bill isn't going to clear, it'll bounce. I mean, that is not how your association should be operating. That should be a warning sign. Why are we having an unexplained cash shortages? Another thing, a lot of overdraft or other bank charges that we can't explain. Multiple overdrafts is not something that is normal for an association. Unauthorized credits to receivable accounts. Maybe they're crediting, that somebody paid something, but they actually never did, and the money's being routed, somewhere else. Increased in past due accounts. Duplicate payments to vendors. That's a very common one, because as the treasurer's signing checks, they may not have noticed that 2 weeks ago we signed the same check for APS and now we're signing it again. So really having somebody who's on top of things signing the checks, is important. Unauthorized purchase transactions and payment for unspecified services. So I know with my association, we also had all of these payments to plumbing bills, and ended up that the plumber had a relationship with our manager, and it was very difficult to prove that the work was ever done. And so accounting checks and balances, having these in place and reviewing your financials like we talked about 5 minutes ago, are vital steps to protecting the association's assets. But we have to be vigilant and we have to be aware as you're serving on the board. You can't just check out and now look at the board packet until you walk into the board meeting. We need people to be engaged and caring about the association, looking at the financials every single month. And the managers are less likely, or the board members are less likely to steal from you if you are aware and asking questions and engaged and looking at things. We have a cheat sheet on this topic, which we're going to be sharing with you. I think we already have shared it with you in the chat on Facebook and on Zoom. And part of our cheat sheet talks about the triangle of opportunity. And there's a study done about why people steal money from organizations. And one of the, there's a need for it. So maybe the person is going through a divorce and they don't have enough money, or they charged up a bunch of money on their credit cards, or they have a gambling problem. So the need is like one aspect of it. Another aspect is the opportunity. So no one would even notice, right? That, because they don't even look at the financials. They don't ask to see the bank statements. They sign blank checks. They won't even notice. And then the third tier of it is justification. I work so hard for the association. I should be paid more. And so it's just kind of a really interesting triangle of, the mind of somebody who's stealing from an association. So keep that in mind. Be engaged, be vigilant, look at everything, ask questions. Remember that the board of directors every month should be setting aside time to talk about the financials. It should just be a regular entry on your agenda for you to discuss at a board meeting. Typically, the discussion lasts somewhere between 5 and 10 minutes. Just if you're wondering how long, that discussion is typically handled for most board meetings. But ultimately, remember, the buck stops at the treasurer, and the treasurer has the extra responsibility to be vigilant with the oversight of association funds. Make sure as you're, navigating, serving on your board, that you're using really strong professional advisors, who you trust and who aren't aligned with, your management company, let's say. So having an attorney who's independent, an insurance agent, so that you make sure that you have the proper insurance in case this should ever happen. Having a fidelity bond is very important for your association. Having a CPA that you can ask questions to. These are all really key advisors for your association as you're navigating finances. Also making sure you have enough insurance coverage. So, talking to your insurance agent and saying, how much fidelity insurance do we have and who does it cover? Asking the questions so that you have the protections. We were so lucky as our association, we had $1 million fidelity bond, which was really helpful in making us whole again. But most associations only have like 50 grand for a fidelity bond. So it's a really good question to ask to your agent, how much more would it cost to increase our fidelity bond the next time that you, renew your insurance? It's typically done through your directors and officers policy. It's an add-on. How much more would it cost if we up that to 100 or 150 or 250 or 500, whatever, you feel comfortable with? And then review the coverage that the insurance company is offering to make sure it meets your needs. And all this is listed on our cheat sheet. So you want to make sure it covers employee dishonesty, forgery or alteration of records, protection while on association premises, protection while in transit regarding association business. So if a money bag is stolen or something like that, money orders and counterfeit currency and computer fraud. Okay, so let's finish up now that I've scared you, right? Sorry to do that to you, but let's finish up with what are our tips so that this doesn't happen to you? What are some tips to be aware and vigilant and take control of the situation so that your association never has any money taken from you? So like I said, keep association records up to date. Don't fall behind on financial statements. Don't fall behind on budgets. Make sure you're assigning control of your reserve fund to the entire board, not one person and not the management company. Typically, the reserve fund has the most money for your association in one place. Also, make sure that your reserve funds are in an FDIC insured bank and that you're moving them, around so that you're under the limits of the FDIC insurance. Monthly financial reports should be prepared and made available for board review. And what's typically included in these monthly financial reports is going to be a balance sheet for the association, the year-to-date budget, a statement of revenues, expenses, the bank statements for all the bank accounts, all the CDs. These are typically a delinquency list, are the typical things that you're going to see in your monthly financial reports. Really think about requiring 2 signatures, maybe one being a board member, maybe one being the management company, maybe 2 board members on all checks or transfers greater than a pre-designated amount. I know management companies get really mad when I say that because they just want to be able to write checks, but talk about this with your management company. If the management company is going to be signing checks on your behalf, make sure that you are receiving all of the backup online and that you are checking the backup to make sure that if they are signing checks, that it's for your association and you're reviewing the bills after the fact. But I really would prefer if you have at least one board member signing checks for your association. Prior to signing checks, authorized check signers should review the invoices and supporting documents. We've talked about that quite a bit today. Reviewing the bank statements and reconciliations on a monthly basis. Keep only a small amount of petty cash on hand in a secure place and have a specific procedure for keeping track of the petty cash. Review the delinquent receivable balances so that who's not paying, whether it's assessments, if they're not paying, different things that might be owed to the association, you should be reviewing those. Making sure that you're, purchasing the correct insurance so that your association is protected in the event that there is some form of embezzlement. Having an audit review or compilation done on a regular basis. Now, remember, the law in Arizona says that you have to have an audit review or compilation every year. You are only required to have an audit done by a CPA if your documents require the audit to be done by a CPA. So it's kind of a loophole. A lot of associations don't have a full-blown audit by a CPA, but it's a good idea to do it, even if your documents don't require the audit to be done by a CPA. And what we would recommend is maybe every other year, every 3 years, if you can't afford it every year. And what you can do is just take 3 years of records to your CPA and say, we're giving you 3 years, you randomly pick a year, so that, no one knows what year is going to be audited. And last but not least, I hope this never happens to you, but if your board does discover that funds are missing, or you're suspicious that funds are missing, reach out to your trusted advisors, your lawyer who is independent from the management company. I do not represent management companies. I have no special relationship with a management company. I represent the association. So if you're contacting our firm where there's potential serious problem like this, I would never, ever, this is against my responsibilities as a lawyer, breach your trust by going to the management company and telling them. I would advise you independently on what steps you need to take to, verify whether or not there actually is embezzlement or theft or fraud of your association funds. Help you get the suspected fraud perpetrator away from a position of control, put a stop on bank activity, help you notify your insurance carrier. These are all things that we can navigate together if you're in this unfortunate situation. And I hope it never happens to you, because it is a nightmare if it happens. I can tell you, it took my association, we were in a tailspin. Gosh, for 1 year, it was a really big job to, work on all this. The second year wasn't as bad, but it was about 2.5 years to get the situation resolved, and a lot of sleepless nights, frankly. Trying to untangle the web of deceit that the manager had, formed. So I hope that never happens to you. Make sure that you're taking a look at our cheat sheet that we've shared with you on tips for preventing theft and fraud of association funds. It has a great summary of really everything that we've talked about here today on that topic. So it's a good refresher. You might want to share that with your board too. Okay, so that's it. So we had a great class today. Thank you so much for being here. At one point, I think we had almost 150 people joining us live. I'm so sorry for the audio and technical difficulties we had at the beginning of today's session. I hate it when that happens, but I appreciate your patience, kindness, and encouraging words, because we were getting a little hot under the collar here, worrying about things. But Morgan, who is my superstar, Morgan Ronimus, was always cool under pressure. We switched out the computers and we got back online really quickly. So for those of you, we will be sharing with all of you our cheat sheets and also our script for today, so that you can take a look at it. If you have any questions or you missed anything, thank you again for joining us today for class number 8 of our Virtual HOA Academy, our 2020 Virtual HOA Academy. It has been awesome to partner with the cities of Avondale, Chandler, Glendale, Goodyear, Mesa, Peoria, Phoenix, Scottsdale, Surprise, and Tempe. Really for over the past 2.5 years since the pandemic started, to give you live virtual presentations where we can provide information to you on a variety of topics, and have a time period where we can stay and answer your questions for free, so that you feel that you are not only able to listen in on a presentation, but then also get immediate feedback to your questions. So this format has just been working really well, and we appreciate the large volume of people who are taking advantage of it. A few things to mention as we look forward to our busy month of September. We have several free learning opportunities. We have our first Friday free call-in, and that is going to be Friday, September 2nd at 9:00 a.m. It's our firm's monthly virtual First Friday free call-in, where I answer your HOA and condo legal questions live. You can always find additional details on our First Fridays or any other seminars that we're teaching on our firm's website at mulcahylawfirm.com. You can submit questions that we will answer live on September 2nd, starting now, through the morning of September 2nd at 8:45 a.m. So be sure to tune in for that. We usually get a lot of great questions, somewhere between 30 and 50 every month, and we answer every question. Also wanted to let you know, Chandler residents, any of you who are listening in today from Chandler, on Tuesday, September 13th at 5:00 p.m., I'm going to be in person at the City of Chandler for their HOA roundtable, where we are going to be discussing hot topics for HOAs and condos. Please visit our website for more information on this event. And again, our website is mulcahylawfirm.com. And last but not least, we have our 9th class for Neighborhood Services Virtual HOA Academy on Thursday, September 14th oops, I'm sorry. I have another class I'm getting a little tripped up here on September 14th. So I'm going double duty that week, September 13th and 14th. I'm going to be teaching for the city of Scottsdale for their fall 2022 Scottsdale Neighborhood College. And we're going to be talking more in depth about the new laws that are going into effect on September 24th. And we're also going to cover our most popular topic, which is what are the roles and responsibilities of board members. And last but not least, on September 20th at 11 a.m., we're going to have class number 9 of our Neighborhood Services Virtual HOA Academy. That's going to be on Zoom and Facebook Live, just like we always do it, the third Tuesday of the month at 11 a.m. And we're going to be talking about rental restrictions and amending CC&Rs. And you can bet sure as I'm sitting here right now, we're going to be talking about the new legislation because that is definitely going to impact how we handle rental restrictions in associations. So September is shaping up to be a very busy month. It's back to school for my kids and also back to teaching a lot of classes for our industry, which I absolutely love doing. So look forward to seeing all of you with our 4 different teaching opportunities throughout the month of September. Again, if you want any information on them, you can go to our website at mulcahylawfirm.com. Thanks again, everybody, for being here today. Sorry again for some of the technical difficulties and look forward to seeing you in September. Take care.